The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the April 25th magnificent Monday edition of today's Trader's Edge. I'm your Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure that we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go look at the circumstance of these markets, what the bulls and the bears, the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence, but more importantly, I am here to serve you. So feel free to pick up that phone, dial on in anytime at 877-927-6648. Of course, internationally, 727-445-1044. Let's go ahead and get this show kick-started on this magnificent and marvelous Monday. Of course, this is the Hotel California, sponsored by Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we have the Dow trading down 60 points at 17,943. S&P is off 7. 2084 is what she's printing at. NASDAQ Composite down about 17 points, trading at 48.89. Russell 2000 off 9 points, trading at 1137. The DAX closed off 80 points. The FTSE down 50. You've got gold trading out at $12.41. That's up about $12. Silver's up 14 cents. She's trading at $17.04. Light sweet crude is back 60 pennies right now, trading at 43.13. Lead the charge here to the upside. You've got Athena Health. That's up 3%, a little over $4. Tribune Publications up 55%. I think that's some merger buyout stuff. We won't spend time looking at that. Amazon up about 4. Google's up $3. Ulta Salon up a couple. To the downside, Perigo Company, PLC, down 15%, nearly $19. Mettler Toledo International, that's off about $6. Taro Pharmaceuticals, that's down $6. Intercept Pharmaceuticals off 5. So we got a lot of pharma type companies out here. Allergan down $5. Wynn Resorts off 5. Jones LaSalle. So we got a lot of equities that, not a lot, but we have a number of equities that are down about $5. But the first thing is let's go try to figure out what the market is doing. And what we want to do, well, first, let me just switch over here to this 30-minute panel. For those of you watching on TigerTV, obviously inside the den as well, you're looking at my 4-panel screen out here where the mini S&P futures is in the upper left-hand corner. We're on the 30-minute time frame. The upper right-hand corner is the NASDAQ. The lower left is the Dow. The lower right is the Russell 2000. This gives us a fairly good snapshot as to where we're trading, what kind of patterns might be out. Here's an example. My eyes, when I took a look at this ES Mini, I said, hey, looks like a 3 drive to a bottom type pattern out here. I saw the same thing when I looked at this Dow futures contract. But then I looked at it and said, nah, not really, because you don't like to force patterns out here. If we take a look at this, in order to have a 3 drive to a top or bottom, in this case here, I'm going from the first low. I'm looking now, let me just do this here. Let me blow it up on my screen here for you. I would be going from this swing point right here. Took place about 6 o'clock in the afternoon. That was on April the 21st. Then, and I'm really right now just looking for a distance, right? I'm looking for a distance out here, and that's what this little tool here helps me to measure is distance. That took 33 bars. And the next 33 bars, somebody wrote Route 66. They must have known I was going to show this because you can see 66 bars later. That's right here at about the time frame of 4 a.m. this morning on April the 25th. Now, that, and I'll go ahead and get rid of this little distance measurement out here. That actually, you could say, hey, it's a 3 drive. Well, it's really not. You have to have an expansion of swing points, which is not what you have from here 10:30 in the morning. This is on Friday, I believe, to this little area down here at about 4 o'clock this morning. So no real three drive to a bottom pattern inside of the Dow. Nonetheless, we have seen a bounce. If you take a look at the Dow, and I'll show you the reason why. Well, you already know the reason why, but we'll go take a look at it anyways for those that don't. You had price moving lower, doing with less relative strength. Cavalry rushed in right here. Trading session at 11 o'clock. If we take a look at it, this candle right here at 11 o'clock this morning, that's your next most important candle of the day out here. Why? Well, it looks like maybe we didn't have a three drive to a top pattern, but we certainly had an A to B equals C D pattern. And you have a little key reversal session, right? You see you got a bullish engulfing morning star and a key reversal session all wrapped in one trading session at 11 o'clock. Why? Well, the morning star, you see you've got this nice little bar here, moves to the downside, nice wide-ranging bar. The very next candle session, price basically stays at or near the bottom with little body, and then you've got another candle moves to the upside, makes its way into the down candle by more than halfway out there, and this entire candle wrapped around the prior candle, so that's your bullish engulfing, that's your key reversal, that's your evening star. It says that should be support inside of the Dow futures. The number you're looking at down there is 17,773. You get down below that level, then you're targeting, or price will be targeting 17,735 to the 17,695 range. Now, that's this chart. You actually had the same kind of thing occur inside the ES Mini out here. Same pattern. If we take a look at it, right, you can see, I'll just widen it just a tad for you. You can see the exact same candle formation out here. And by the way, not a three drive to a bottom pattern that formed out here. A to B equals CD, sure, but no three drive to a bottom pattern out here. No, that formed either at 4 o'clock this morning or at 11 o'clock here this morning. Now, what we can see, and it was the same thing, I didn't mention it, my apology there on the 30-minute chart here for Dow futures. What we can see is that the market profiles that formed out here recently, the bottom formed below the prior bottom. Right? You're saying, what the heck is Steve talking about? Well, let me just show you. Let me just turn off price out here because we can learn as much about where these new, whoops, I didn't mean to turn that off. I meant to turn this up. Where these new supply and demand areas are forming as we can anything out here. That's why you certainly want to be able to access your TAS market profiles, however it is that you're doing it, because they're invisible to the naked eye, and our eyes aren't naked. We're always looking out here to see where those new profiles are forming and what is the basis and where's the location compared to the prior profile out here. And you can see both the bottom and the high out here of the previous profile have been taken out, right? Price is moving down. You're typically not going to get a new supply area above the prior profile. So it's got to make you say, something to think about. The other thing that you and I know about this market profile is you got that little point of control area. That's that little dash line on my system right now. That's trading out at about 20.75, and it's closer to support out here. Support of 20.72. So now we go ahead and we put price on there. Is it really after so here's what we had, right? You had that bullish reversal. You got the cavalry shows up, right? You got a new market profile that says, hey, this little price area, which takes you all the way up to the 2080.75 level. Don't worry about it. It says 2080.63. Just round this in quarters, not round it, but move it in quarters out there in order to be able. Now, if we get above this level here, we're going to watch and see what happens as price gets to 2082. Why 2082? That happens to be the daily point of control out here. Now, there's another thing, and what we haven't looked at yet, and we're going to have to take a look at this when we get back from the break, are all these occurrences, one after another, little tidal waves of price moving lower, doing it with less relative strength out here. But it's been doing this pattern, since about April 21st out here. And as I look at this, it looks like the bounces may be fairly close to one another. Maybe we're getting up to another area right now. Maybe this is the extent of the move. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee.
See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 47, S&P is down 5. Did I say evening star? I can't remember if I said evening or morning. It's a morning star. Evenings, morning star's at the bottom with the sun rising, and the evening stars when the market is setting, and you've got the reversal pattern out there. But, if you ask me to rub my head and tap my stomach to prove that I could actually play the drums, you see, I can't really do that. I'm not that coordinated out there. So I may be saying one thing, yet thinking another thing, and there's a disconnect between the brain and the larynx. Or in any event, let's go back and take a look at the patterns on those 30-minute charts, because one of the things that we noticed was we've seen these very similar bottoms form. And then we've just seen, bounces, and they're not going to be exact out here. But one of the things, visually, I'm just taking a look at it. So here was that first price relative strength divergent pattern out here. Oh, you got to grab the right tool. See, I tell you, you can just see how the lack of coordination I have out here. But here's wait a minute. Here's the first bounce from this low out here, April 21st, all the way up to the high right here. You can see I'm just coming up to this high, basically. So there's my yellow box, so to speak. The next pattern that's set up out here was really from right down here. You can see that was really the extent of the bounce out here as price came into the close on Friday out here. This here is the open, this little candle session here where price gapped up inside the ES mini, gapped up and then started trading lower through most of the evening out here. So there's the second bounce, same real price distance out here. If we take a look at this bounce, it's next time a pattern shows up, take a look at that. Really the exact same. So you can see that at this stage here, there is a very good structure with regard to the types of bounces. Now, if that's all we're getting from these patterns, that would say what, at least with regard to the 30-minute chart out here? Clearly the downtrend, is truly kicking in, and the bounces have got this nice harmonic value. What's that measure us at? That's from about 20, in this case here, 27 and 2081. Out here, remember we said if price can get above this 2080 level, it ought to get up into about the 2082 area. So that's going to be very important here, in my opinion, just to take a look at the CS mini chart, just take a look at those patterns and taking a look at those bounces that have all been the same for the most part out here that this, in fact, could be the extent of the move. Maybe it's got just a tad higher to push, and then maybe it closes actually right back down below that 2080.75 level. That's the current TAS market profile. So you'll want to keep an eye on that. What happens if it pushes up above this level here? Then that little harmonic pattern becomes an expansion of that. Maybe it's 1.272. Maybe it's 1.618. Maybe it's more than that. I don't know. But what I can say is that if we take a look at these profiles, it would say 2095 to 2097. So in essence, that's what's going on inside the 30-minute charts, the short-term time frames out here. Now let's go try to get a feel as to, and it seems to me like it's doing it same kind of harmonic pattern inside the Dow as is inside the ES Mini out here. So now let's go try to figure out what's going on in a little bit larger time frame. Right? Let's go take a look at a daily chart, see if there's any kind of information that you and I can glean out here. Well, let's start again, a four-paneled screen. This time the upper left is the NQ, NASDAQ. Upper right is the ES Mini. Lower left is the Dow, and lower right is the Russell 2000. Now, as we take a look at this chart out here, is there anything? Let's take a look at the NASDAQ. We'll just look at market profiles out here. What is bearish about the NASDAQ? What is it that you see that is bearish about the NASDAQ out here? And the answer is not a whole lot. All that we really see price doing, there's a new weekly profile. It's not new, but there's a weekly profile out here. That price hasn't really been able to. It was above it for about 6, 7 trading sessions or so, 8 trading sessions maybe since April Fool's Day out here. But I'm more interested in taking a look at the daily profiles. If we take a look at those, let's put those on my chart. Let's actually just turn off the weekly since they're not that significant as we speak right now. So what do the market profiles tell us about if we just simply get rid of the price area? We got a brand new profile at this stage of the game. It formed where? It formed above the prior profile, right? This low is above the prior low. Certainly the high is above the prior high. That has a bearish. That has a bullish bias to it. It has a bullish bias until what? There's a bullish bias until price gets below the bottom of that market profile. So the key number, which we can see was tested on Friday and tested again last night, today during this trading session, and 4440.118 becomes the level to be watching. And this profile, again, that point of control a little bit closer to the bottom of the box. Not that substantially closer, but just a tad out here. But in order for the NASDAQ, which has been the weak link out here, in order for that to give you one more signal, Curly, out there, from City Slickers out here, you need to see a convincing close below 4440.18. What if we don't get that? Well, you know the expression. It applies to market profiles as well as it does swing points and however else you want to apply it. If you can't bust them down, what will a market do? It'll try to bust them to the upside. At a minimum, you would anticipate that price from a daily perspective, 4494.88, maybe it gets up to the top of that box, 4563. That's the message of the weak link that is out here, and that is the NQ. We can go take a look at some other messages out here, but this hasn't cracked a level that it needs to crack if it's really going to go ahead and try to motor on down to the downside. Now, in the case of the ES Mini, let's go take a look at its message out here. In this case, the daily and the weekly profiles, you can see strong pièce de résistance out here, right? You can see that you got a top of the weekly box at 2095 and 3 ticks out here at 0.75, as well as the top of the daily box at 2097. If we go ahead and let's take a look at these profiles, let's just turn the weekly off for the moment. We know I'll put those back on. Let's turn price off for the moment. And what does this tell us? This tells us that you have a bullish leaning biased market profile that just formed within the past couple of days out here, right? Look at this. It forms where? Above the prior bottom. The bottom was above the prior bottom. The high is well above the prior high. But what? Just like the last profile, it was a bearish leaning or sellers oriented market profile. Why? That point of control closer to the top of the box. So what does that say? That says sellers inside the ES Mini. Much more information that comes from this profile than the NQ says it's sellers that should be in control of this price area. And at this stage, they certainly have not taken advantage of that. So the key area inside of the ES Mini, or key areas, are going to be the bottom of that daily box at 2151.75 and the top of that box at 2079.50. What's this communicating to us now? Not a whole lot. I mean, resistance, we know big resistance up at that top of the box just simply because of the weekly profile that was up there, as well as a bearish leading or sellers-oriented daily box. So the key level inside the ES Mini is going to be that 2059 level. Now, let's go beyond this. The Dow, what are we going to communicate? What's the Dow communicating to us? Same kind of pattern, right? Actually, in the case of the Dow, in order to really bust this thing down, it's got to get below its daily, which is also now the old top of the weekly box out here. And this is not looking too shabby out there. It won't look shabby until it closes below 17,695. You get below 17,695, and then the next level on that floor to let a few people off is 17,535. You get below there, it is sayonara to the Dow futures, but not until that point in time. Of course, that leaves for us to take a look at is the Russell 2000. And if you were to ask me on a daily basis what is bearish about this, the absolute answer, and this is the small caps, is nothing. Not a gosh darn thing, Gomer. This says this wants to trade to 1178. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's off about 57 points right now. S&P is down 7. So the first two segments, what we took a look at, let's try to reach some type of conclusion. We know on the 30-minute basis, we saw some nice bottoming patterns there, right? But what you and I did was we delved into it further, and what we noticed was that on each of those bottoming patterns, there was basically a similar point movement off of the bottom before price just really stalled, and the ES Mini got very close to that level. So it's either occurred or it's just within a point or two away from that. And so what we know is that, okay, we're going to get a real feel for what these markets want to do. I think we get a really decent feel for over the course of the next 2.5 hours out there. I don't know that we're going to get that type of a feel during the next 30 minutes. We know on the daily charts, that what we have out here is we have very significant levels of support that have not been broken. So until those get broken, you can just assume we're going to continue to bounce around sideways, maybe sideways to slightly lower out here. But that would be the typical pattern. A question then that was posed inside of the dens is, Steve, what, in your opinion, will break this market down? And that is really, isn't that really the ultimate of questions out here? And, thanks for asking that. Here's what we know about the market. So as opposed to my opinion, why don't we just really take a look at what the market traditionally does and where we're at out here? I think that is the better deal. And here's what you and I know. And, if you take a look at the writing that was in here, this was written back in December of last year with regard to what does the market do. I haven't changed any of the text to the downside. And what we know is that coming the end of the year, early January, the market moves lower. It absolutely moves lower. On average, 84-year shoot. You take a look at 4-year cycles, presidential cycles, second term, the whole thing. Odds favor the market moving lower. Into when? Yes, the end of January, early February. It's never going to pinpoint it to the day, but over 84 years, actually, I average it out. It does really pinpoint it to the day out here. But I don't go ahead and take a look at that. I just know you should be looking for the tops and bottoms. Okay, and since that time frame, right, the market has moved up. Extraordinarily. But if we only use this as our guide, if we were taking a look at this here because it's moved up, for the last, X number of weeks out here, hey, since the February bottom, right? And if we look at this chart out here, what would you have anticipated if you didn't even see any of the left side of that chart out here, right? I don't know if I can do this. I should be able to do this. Let me see here. Let me see if I can. What can I do? How would I do this? Just thinking on my feet out here again. That could always be a problem, but I'm going to do it anyways. Give me one more thing. Oh, well, that sort of didn't exactly do what I was looking for. There we go. Right? It's kind of like this. If we just knew that was normal, right? It made a bottom, but what you and I knew was this was the normal formula over 84 years. Price moved higher into when, right? You're just looking at the blue line on my chart out here. So actually, the move that we've seen over the last several months since the middle of February out here isn't really unusual, is it? Many people would make it out to seem like it's unusual, but it's not unusual. It's what the market really does. So the question, what in my opinion will break this market down? Here's, if this works, why would we anticipate that this is not going to continue to work out here at this stage of the game? So it's going to first break it down. I know a pretty smart guy that says this. Basically, I think he says it every day. What you think about, you bring about. What you focus on grows. You know that guy too, right? And when he says that, what that is doing out there is we're coming into that sell in May cycle, right? That begins right around May, and when that's beginning right around May out here. What's taking place, right? So people are going to be, hyping the whole sell in May theory. So the very first thing that you should anticipate, what's going to break this market down, that's going to be some type of slight movement to the downside, right? The sell in May, right? But what's going to happen? Traditionally what takes place, after that first few days of selling in May, what happens? Market finds some type of short-term bottom. Market moves sideways to higher and does it till when? Does it really until this level right here. And what's that exact date? I don't know. It's around the middle of May out here. And then in the middle of May, that's when people really start to head away out here inside the market. And the market ends up making a pretty decent bottom right while people are out partying right around July 4th. The fireworks are going off. The market maybe has been moving lower. People are getting ready to pack it in, except for the traders who know that, guess what? You see another nice thrust to the upside that takes you into when? It takes you into the middle to end of July out there. And then things start rocking and rolling, and they move to when? They move down to the bottom that forms sometime in October out there. So, with regard to answering your question, what is it that I think? If you're looking for the event that makes this happen, it happens on average. Now, it happens more than average. This is just the averages over the last 84 years out there. And there's not anything at this stage of the game that should make us think that the market is going to do anything different, than what it's doing right now. So that's your 84-year average, and that's what I would expect. What's going to be the event? It doesn't need to be an event, right? We have the markets going higher. We've been doing it with light volume. We're back up to resistance levels. We're seeing some technical failures out here. As the market moves lower into October, that's really coming into, from July into October. Is that going to be curtains out there? Probably not. There's no curtains until those long-term trends are broken. I dig around here and I can find my long-term trend chart out here, but we're going to see that the market is still everywhere across the board. That includes the Dow transports. Are still in a nice, uptrend out there. So that's what my 8-ball says. That's what the market's 8. It's really the market's 8-ball. It's not my 8-ball. I'm just reading to you. I'm not giving you tea leaves. We're just taking a look at what does the market do out here. What has it done this year, and why would we think that it's going to do something different? And if it does, we're going to know, right? We're going to see some other kind of pattern. We're going to see it. We are going to know about it. We may not get a early invitation. That's why we'll take a look at these other patterns that are out here, but those would be our early invitations out there. So anyways, that's my thoughts. Now, and I hope that answers your question. And there's another question that is posted in Tiger Den IC that says, Steve, how about WKHS? So let's go take a look at WKHS. Let's go see what WKHS is. Workhouse Group. This is working its way to the downside right now. Now, I don't know if the listener out here is long or short, but let's go take a look at this equity. Not a lot of liquidity. That's the very first thing, right? When this stock chart pops up, what is the very first thing that you want to notice? At least what I would want to notice is there's basically, this is an illiquid stock, whatever they do. Why do I say that? Here, I'll show you why I would say that. The trading day of, I saw a couple days show here. The trading day of January 26th, the total number of shares sold on this was 1,500 that traded hands. 1,500 shares that traded on this. So the first thing that I would caution anyone on is don't get into this equity. There's no volume in it, but we can come back and try to figure out what it's doing. Right now, it's trying to find a level of support, which is going to be at the 642 level, is what I would, where I would estimate at this stage of the game. That is WKHS. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. John Logan has just announced that he is hosting a workshop Wednesday, April 20th for all TAS Profile Scanner Plus subscribers, opportunities in the current market, and strategies to profit. In this hour-long workshop, John Logan will use the TAS Profile Scanner Plus to give you a current breakdown of the sectors in the market and the opportunities that are present, as well as providing subscribers with the best strategies to trade with to profit when using this powerful piece of market scanning software. Right now, you can sign up for the TAS Profile Scanner Plus at the front page of TFNN.com. The TAS Profile Scanner Plus is such an amazing piece of software that we're even offering a no-questions-asked money-back guarantee for all new paying subscribers. Don't delay, as John Logan's subscriber event is coming up soon. Sign up now for the TAS Profile Scanner Plus and be up and running within minutes using this powerful piece of market scanning software. With a 30-day money-back guarantee, you have nothing to lose. Sign up today.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's off 63. S&P is down about 7 points. Let's take a look at light sweet crude. As we take a look at light sweet crude off 82 cents, trading out at 42.91. And just like we did with the other charts, the short-term charts, the daily charts inside the futures contract, let's go ahead and turn price off. Let's first try to understand, these supply and demand areas out here. Oops, I turned off the wrong thing. There we go. And as we take a look at this chart out here, what we can see is we're going to see a brand new market profile that actually formed here today. Brand new market profile. This is the blue lines out here. And what it is that we should notice, let me get rid of this. Why is that moving average line on? Okay. Now we've got a clean chart. And turn the volume off. There we go. Now we have a real clean chart. Now, as we take a look at the weekly chart, then now I'll turn things on and off, just make it easier. So I'm going to turn off the daily. Okay. As we take a look at the weekly chart, one thing that we know about this weekly chart is that should have been strong resistance. This was a sellers-based box out here. 4206 should have held as resistance, right? Let's go ahead and, but we know, I'll just turn price back on. We know we're trading what? Above 4206. Old resistance should become what? New support. So 4206, you're trading at 4293. That's the first level that you're going to want to watch. As we take a look at these profiles, and we go back and we turn on our daily out here, what we also know is that we have a brand new box that appeared above the prior daily. Again, bullish bias. Let me turn off the weeklies out here, and then because it formed above a prior one. And then we even have a larger bullish bias because in this case here, right, point of control closer to support. So that says that 42.29 level should be a key level of support for price. Has price gotten down to test that area as we speak? No. Right now it's down at a natural area where both buyers and sellers are pretty comfortable. And that's that point of control level, 42.84. Why do we want to pay attention to this? Well, a couple reasons. One, we know about that directional, not tick for tack, but we know about the directional correlation between our markets, the ES Mini specifically, and the and light sweet crude, and we've got A to B equals CD patterns that are in place out here to the upside. So we're really looking for a level of support to fail. These candles, even though today's candle session would be considered a bearish engulfing candle, you've got to say, hey, hold on a minute here. You got to really learn to read these candles, and that would be an accurate read, by the way. But the reality is we have these last three sessions trading with inside this widest ranging bar out here. And any close above, quite frankly, the close of the session from April 20th, which is 44.18, that's a continuation pattern to the upside out here. So we know that our market profiles and light sweet crude say we've got really strong support in the range, and that's what you want to do is in the range out here is going to be the top of the weekly at 42.06, the bottom of the daily at 42.29. Those are key levels of support that in order for the market to move itself to the downside and say, hey, the heck with waiting till May 4th out here, whatever the day of the year, the first trading session is in sell in May. I think it maybe is May 4th. If you see breaks of these areas, it's saying, I don't care about the last 84 years worth of average data. I'm going to do my own thing right now. Otherwise, though, those are key levels to be watching inside of light sweet crude. You've got gold that's trading up here, $10, trading out at 12.40. Don't get, as you know, you're probably tired of me. Nobody gets their skirt in a tizzy over the fact that gold is trading up $10. Does it mean anything out here? And there's your answer. It means just nada, zero, zilch, nothing. Why? Because it's trading at basically the same price it was at the end of February. We're now at the end of April. We're in the last week of the end of April. Right? End of February, you close out at 12.35. What are you trading at right now? 12.42. Nothing. Now, on a daily chart out here, the daily time frame, as we take a look at it, we did have a couple of reversal candles out here, right? You had a nice little shooting star a couple days ago, April 21st, right? The opposite of that hammer candle. That says that that's a very important level of resistance now, 1272.40. That's where price ought to really peter out. If it does get above that, it says price is going to go up to this swing point out here, which is 1287.80, maybe even take that out. Do I think that's going to happen? No. I think that what we're seeing out here in gold, as I have stated and restated and stated until I'm blue in the face out here, is that the entity or groups of traders that are selling into each of these rallies, and they're just licking their chops. They are licking. I think they're going to continue to lick their chops for as long as they can establish these large net short positions out here. But you've got a couple of bears. Here's the evening star, right? Here's your three candle session. I think I might have called this morning's bottom an evening star. That's the morning star. But here's the evening star out here. So, you got this. You got the shooting star. You've got this Eve 3 panel. So here's where the real sellers are hanging out. They can't hide. They don't hide. They give us clues all the time with regard to light sweet crude. And we can see that price right now running into its TAS market profile high at 1242. I'm more interested in the resistance zone of that shooting star candle that occurred on April 21st for resistance than I am worried about the market profiles out here. Likewise, gold's got to get below 1211. Really, the price point that I would be looking for is 1198. Once you get below 1198, you're going to have every trader that is still holding positions since February 11th say to themselves, what in that heck did I do out here? Did I just get trapped? And the answer to that question will unequivocally be trapped like rats out there. So be very careful here with regard to Goldilocks, because I can't tell you when, but I can tell you its next major direction, and it is not to the north side out there. So that's what's going on inside of gold. Very likely what you saw in silver out there was nothing more than a blow-off top of last week. And silver's going to head lower as well. So just be careful inside of those metals. Mining, structure a whole different thing. You really got to go take a look at your specific miners out here. But the metals, that is the message out here. Okay, so we take a look at commodities. We've taken a look at really the general market. So we've got a really good layout and strategy. Let's look at a couple of individual equities out here. Let's look at Google. Right, Google came out with earnings. They thrashed to the downside. We got Apple after. Let's go look at Apple. Is there any clues inside of Apple? We'll come back to Google, but is there any clues inside of Apple as to what it wants to do? Well, we're seeing all the reports out there that iPhone sales kind of are sucking wind out here. I haven't replaced I've never been one, though I'm not the guy that they're after. I'm not the one that goes out and replaces my phone every time they come up with a new one. Usually I don't replace it until the old one breaks. And in any event, so what is Apple doing right now? Let's go take a look at. Let's go. We got to add some tools back here. Those tools being volume. I want to see what we're doing volume-wise. So let's add that back to the screen. So today, so far, Apple has been moving sideways. 17 million shares. We can see these market profiles. They suggest Apple could easily trade down to 99.80. That would be a level of support inside of Apple. So, write that down on a pad of paper. We'll see if that is what takes place. What we can also see, if we just simply eliminate the market profiles out here, is we can see a level of breakout support that hasn't been tested, but Apple, in fact, did break out to the upside on the trading day of March 15. It did it with a fairly nice bar, not a lot of volume, 40 million shares to the upside, but you're pulling back into two breakout areas, right? The first was the gap up on March 15th, 40 million shares. The second was the trading session from March 29th. That had 31 million shares. So really the benchmark you're looking for here is going to be 40 million shares. You can also make the case that Apple is pulling back into a breakout area. But what we also know is it hasn't broken out of that little descending price channel. Steve Rhodes with TFNN. We'll be right back.
If you're looking to discover a new financial resource and diversify your financial portfolio, don't miss out on the Market Safe Commodity Solution CD from Everbank. This is the second running of their popular 5-year U.S. dollar-denominated CD, which gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The May 19th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member, FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's off 61, S&P is down 7. If you pay attention to my screen out here, the third panel from the left upper panel, you can see the Qs have done volume today so far. So in the first 4.5 hours of trading of about 9.4 million shares. Now that equates to somewhere around 13.5 million shares. That would be very close to either the or the second lightest trading session since January of this trading year, this calendar year. If in fact that's how volume pattern continues, 13 million. We know that a lot of the volume came in the early session, the first half hour of trading, for 60 minutes of trading as well. But of course, you get that at the end of the session too. But right now, you're on pace to do about 13 million shares. Certainly not giving us a great indication to the downside. The IWM has done about 10 million so far. This is going to do about 14. That's extremely light. The SPYs are 37 million. Looks like they're on pace to do 53 million shares. The Diamond's about 1.8. You can see, so on pace to do maybe about 2.5 million shares. That's also so. There is no volume to the downside. If we were going to just simply look at the QQQ chart to make our trading decisions, well, our trading decision would already have been made at this stage here. We'd say, look at that island top reversal pattern inside of the Qs. For those of you that are saying, what the heck is that? That is this session right out, this group of sessions, the trading days between April 13th and then April 21st. We had a gap up in price, that high of that session on April 12th, where price had gapped up from. That price was 109.72, and we haven't seen a low that came down to 109.70. We got to 109.88. That's not 72. That's a 16 cent difference. And then with the gap down on Friday, that created the island top. Of course, the last time we saw an island top inside of the Qs out here, well, that took place right here at the end of the year. Here's your other island top out here, and that was the trading days of December 29th and 30th. Then you had price gap away. Of course, the very next day we came back to work on January 4th, price gapped again, and just things kept moving to the downside. And we had, in the news, China was, the sky was falling, all those kinds of things. But that's what's going on. If you do have that, you do have that early warning sign, that message out here. And this island top, by the way, this formed in an area where price, I don't think price ever got back to test the resistance of this bottom of the session from December 31st. It didn't. So, it got into a level where you had some volume that was moving to the downside back on the trading day of January 4th. That had 50 million shares to the downside. On Friday, you did 39 million shares to the downside. Now, if we look for market profiles, which we should, let's go turn those on out here. Let's try to turn those on. See what this helps us identify. Price right now has come down right. Hey, look at this. So you're right down at the bottom of its TAS daily, right? And that level is held as support, as well as the top of its weekly box out here. So now the Qs are going to absolutely be influenced by Apple. Just simply the weighting out there, 11, 12, 13%, somewhere in that range. You already know that. But the Qs have, if they've spoken, they've given a message here that says it is that time for the sellers, time for the bears to take over. That's what that island top would communicate to you and I. Now, what's interesting about that chart versus this chart, let me just switch this over to a weekly, I think. This is the IWM when I say this chart, by the way. And as we take a look at the IWM, I think both you and I noticed this last week on Friday, that price is broken above the trend line. And it's broken above and it's trading above the gap to the downside from January 4th, the same January 4th that you and I looked at inside of the Russell, inside of the Qs out here. Very unusual. The Qs should be out in front. They should have gotten that message and should be headed to the downside, but they're not. They're not. Hey, folks, stay tuned. It was great to be with you on Magnificent Marvelous Monday. Stay tuned. David White is up next, and I'll look forward to seeing you on Terrific Tuesday, sometimes referred to as Turnaround Tuesday. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.